Hello and welcome to this Forex Preview at XM.com. We'll be discussing the upcoming Bank of Canada meeting and the potential reaction in the Canadian dollar. I'm Maria Pachurdiz, and joining me is Senior Investment Analyst Haralambos Pissouros. So Haralambos, back at its December meeting, the Bank of Canada raised interest rates by 50 basis points. What data has come out since then, and how do you think that might impact the bank's upcoming decision on Wednesday? Are we likely to see another hike?
Hello, Maria. Yes, indeed, at the December meeting, the Bank of Canada raised interest rates by 50 basis points, confounding expectations of a 25 basis points hike. However, what attracted more attention was the change in the bank's guidance, with officials noting that they will be considering whether the policy interest rate needs to rise any further, hinting that this could have been their final move in this tightening crusade. However, data releases thereafter convinced investors that December may not have been the last time officials pressed the rate hike button. Yes, headline inflation slowed further in December, but underlying metrics have not shown signs of a significant slowdown yet. This suggests that headline inflation may be easing due to the decline in prices of volatile items like energy. So with all underlying metrics at 5% or higher, another rate hike cannot be ruled out. What adds more credence to the argument of another hike is the nation's latest employment report, which revealed that the economy added 104,000 jobs during December, pushing the jobless rate down to 5%, just a tick above the record low seen over the summer. And what's more, the cooling of inflation since the summer months, combined with the upward trend in salaries, resulted in improvement in real wage growth. Although wages continued to contract, it was at a much slower pace than in May, when they fell at their steepest rate in more than 20 years. So summarizing, yes, I do believe that we will get another hike, maybe in 25 basis points one.
Given all this, what's the short and longer term outlook for the loonie?
Before I answer that question, I think we need to get an idea of where the market is standing in terms of expectations about the Bank of Canada's plans. Investors are currently assigning a nearly 73% probability for a 25 basis points hike, with the remaining 27% pointing to no action. More interestingly, they are expecting 50 basis points worth of rate cuts by the end of the year. So, considering that a quarter point increment is not fully priced in, the Canadian dollar could strengthen if indeed policymakers decide to press the hike button tomorrow, and it could gain even more if they reiterate the guidance that they will be considering whether more hikes are needed. Yes, that was the wording that hurt the loonie at the last meeting, but with the market now almost certain that there will be no other rate increases, the same phrase could be interpreted as leaving the door open to additional hikes. Also, any communication underscoring that interest rates will stay untouched for a prolonged period after they hit their peak could add extra fuel to the loonie, given the market's pricing for cuts later this year. For the loonie to come under selling pressure, Bank of Canada officials would need to refrain from hiking this week, or deliver the 25 basis points hike and officially announce the end of this tightening crusade. Putting everything together, the risks surrounding the Canadian dollar arising from tomorrow's gathering may be tilted to the upside, while in the slightly bigger picture, China's reopening may be an extra variable with a positive sign. China is the world's top crude importer, while Canada holds the fourth place in terms of production. So any increase in crude demand due to China's reopening may well benefit the Canadian economy and thereby the Canadian dollar.
Haralambos, thanks so much. And thanks for joining us for this Forex Preview at XM.com.